Coming up on Market to Market. Is a new report enough to settle the debate over genetically modified foods? The EPA garners more criticism over its proposed biofuel requirements. And sibling rivalry pushes the passion of restoring old iron. Those stories and market analysis with Brian Roach next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, May 20 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Farmers went in search of dry fields to finish spring planting this week. When that crop is harvested in a few months, more of it will be needed at the local biofuels plant. On Wednesday, the Environmental Protection Agency proposed increasing renewable fuel levels across all types of biofuels, albeit less than required in the 2007 legislation. The 2017 proposal would necessitate more cellulosic biofuel, biomass-based diesel, and advanced biofuels. However, conventional biofuels will fall short of the original goal. Farm state politicians lobbied regulators to go further than the nearly 4% increase over the 2016 benchmark to 18.8 billion gallons, adding fuel producers have capacity to provide more of the homegrown brew. While that report rankled one component of agriculture, another set were poring over a study on genetically modified crops. Colleen Bradford-Krantz reports.
A National Science Advisory Board cautioned the public this week against making broad generalizations about the worthiness of crops simply because they are genetically engineered. The group's 407-page report, released Tuesday after 2 years of work, said no credible studies have provided clear evidence that engineered crops pose a health risk to humans or to the environment when compared with conventionally bred crops. The committee's chair, Fred Gold, however, also acknowledged that detecting subtle or longer-term risk can be difficult.
The idea of putting them all in one basket, it's something that's easy to do, but that's not in our report. We sort of very much try to steer away from those kind of broad sweeping generalizations.
The 20-member committee, representing the congressionally authorized National Academies of Sciences, Engineering, and Medicine, analyzed 2 decades worth of studies on the world's 12 commercially available GM crops, focusing most closely on corn, soybeans, and cotton. The committee found that while average yields for those commodities continue to increase since the introduction of GM crops, it is not at a faster rate than was evident in the years leading up to their introduction.
Finding that was surprising to many of us and we had to scratch our heads about was the fact that we could find no evidence from USDA data that genetic engineering has increased the rate at which U.S. crop yields are increasing.
However, the report did find that insecticide use has decreased in certain crops, apparently benefiting both GM and conventional farms, as the modified crops appeared to help reduce problematic insect populations. The committee also found that biodiversity did not suffer in fields where GM crops were planted when compared with those planted with conventional crops. Gold said that drawing conclusions regarding herbicide was more complicated, however, because of the data available.
People have debated this as to whether there was a decrease or you could see a small dip and an increase. What we concluded in the end is that this data is not very meaningful at all because it just takes into account the number of kilograms, number of pounds of herbicide used. If somebody came up with a new herbicide that was very environmentally friendly, but instead of using 1 pound per acre, you had to use 2 pounds per acre, well, you've increased the use of herbicides, but you have less environmental effect.
The committee examined cancer patterns after 1996, when GM crops were first released, and found no evidence of a corresponding increase. They also found no noticeable difference when comparing cancer rate patterns in the U.S. with those in Europe, where people do not generally eat GM foods. The study, funded by Biomedical Sciences Foundation, Burroughs Wellcome Fund, and others, found evidence of so-called gene flow, where genes pass from one population to another. but said it was not a major concern as there isn't currently evidence that engineered products are unsafe. The report did urge farmers to do a better job of using more variety in their weed and insect management to slow the emergence of resistance to chemicals. Gold was also critical of new GM crops that would encourage farmers to simply use combinations of existing herbicides. The new herbicide Enlist Duo, manufactured by Dow AgroSciences, for example, combines older herbicide components 2,4-D and glyphosate.
The idea of just using tank mixes of the two together does not seem to be a good solution, especially because some weeds are more susceptible to one herbicide than to another, so you're not really doing what you think you're doing.
Several organizations followed the report's release with news releases of their own, praising portions of the report that fit their particular view. The Environmental Working Group responded to the report, which addressed both the pros and cons of mandatory labeling, by urging Congress to craft a national GMO labeling system. At the same time, the American Soybean Association praised the report, which it says, quote, reaffirmed that there are no adverse health impacts associated with the use of GMOs. For Market to Market, I'm Colleen Bradford Krantz.
An episode of the 80s TV show Family Ties featured Michael J. Fox's character identifying the makeup of a dropped handful of change. He knew the sound a quarter, a dime, and nickel made when it landed on the table. The same can be said for a tractor enthusiast. They know the sounds that distinguish each model, be it an A, a B, or M. The attention to detail is what inspires some to restore classic machines back to their vision from their heyday. And as producer John Torpy discovered, one family also is using a little sibling rivalry as motivation. On the outskirts of Dixon, Iowa, the Miller family farm is home to an exceptional treasure of tractors. It began as most tractor hobbies start. In a way to honor his father, Kevin Miller began restoring the family machines. Little did he know the love of restoring would spread like wildfire through his children, producing a collection of unmatched, one-of-a-kind tractors fueled by friendly sibling rivalry. Kevin Miller's love of tractors started before he could say the word. Watching his father work on these mechanized beasts in his workshop, his eye was on the prized Oliver 88, the iron pen that started writing the Miller's agricultural story.
As a small child, I loved tractors, and I pestered my parents for years. When can I drive that Oliver 88 by myself? And I finally got an answer that I could start driving the tractor when I turned 10. And I just could not wait. It was amazing, you know. I'm big enough to drive it, and I love driving it.
When Miller entered 4-H, he was firmly set on restoring his first tractor. One tractor turned into 3 in a short period of time, but after those were done, his passion for restoring and collecting faded. One tractor was put to work on the farm, the other 2 were parked in a shed and forgotten. Eventually, he sold all 3. While Miller's passion for restoration faded, it did not fade away completely. With the birth of his son, the drive to fix old tractors fired right back up.
When I had my first son born, and then he grew up to be in 4-H age, I started him on it. I said, because I loved it. And so he started it and did one tractor, and he liked it, so then that progressed to the next one. And my daughter thought she was missing out on something, and so she got a tractor, and pretty soon it was a family affair.
Fast forward a few years, and Miller is very proud of his tractor restoring trifecta. His love of the hobby is reflected in his daughter Megan and sons Jacob and Patrick. Through grueling hours in the shop, all 3 have found their favorite make and model of tractor. Patrick is a mini man, favoring the energy yellow painted machines that are known for their reliability.
This is Prairie Gold number 2, technically. There's 5 colors that Minneapolis Mulling would have used. This would be the second one, Prairie Gold number 2. Prairie Gold number 1 was only used a couple years in the late 30s, if I remember right. Prairie Gold number 3 is a lot oranger than that.
For Megan, her diverse restoration resume is long, but when asked about her favorite tractor color, she is a daddy's girl.
My dad and I both favor red. I started out with a 1066 for my first tractor as an international, and then I moved to a 1566, and then for my last project as a 21-year-old FFA'er, I wanted to do the 1456. That was like my dream tractor all over the years, but we couldn't find one, or it was too far away or whatever, but my dad made sure to get me the tractor that I wanted for my last year. It was pretty cool to get that tractor. And I got reserve grand champion at the Iowa State Fair with that one, and that was the highest award that I had gotten by myself on a tractor ever.
Kevin noticed his daughter's desire to be working with the boys at an early age.
At the beginning of her restoration career, I'll put it that way, she restored my dad's Oliver and a John Deere, and she did a case with her brother. But she was always the international girl. You know, as she got on after a couple years, she just loved the internationals. Her favorite color's red, like mine. And so she wanted a red tractor, and I think she liked the gold contrast with the red. So she was in it. We always call her the international girl. And I think it was just that gold contrast she liked so well. And that's why she wanted one.
They paint the whole hood gold. And then when they wanted to actually sell them, they'd send them back to the factory and repaint the outside red, but leave the underside gold. So that's how you know you got a gold demonstrator. So these three tractors are all golds.
For Jacob, green is the color of his hobby, but it has nothing to do with antlers. And like his older siblings, perfection is the key. Not just the tractor, but every part of its story as well.
Well, this one is a 1550 high crop diesel. There was not many made of them because it's such a small tractor, and 1550 and 1555 diesels as it is are really hard to find. And well, what's really unique about this one is the high crop factor is that it's a row crop, but it has a lift kit on it. So it has, I call them drops on the back. So a chain goes around to the bottom, which hooks up to a different axle, which boosts the tractor up in the air. It also has a row crop front end, but it also has a back support on it, so that it can support the longer knees so it can sit higher in the air. So it's kind of a mixture between a high crop and the row crop front end together.
Despite their differences in color preference, the tractor trifecta all agree that hunting down and finding the rare and unique machines is the best part of collecting. And the more rare, the better.
It's a 1955 Heritage. Obviously, it's a little different from the rest of the Olivers you see around here because it's red, white, and blue. But this one is actually only one of one ever made. We got it home and it had 5 gallons of water in the engine. It looked like it got beat to death. I built it all the way back up, brought it to the state fair, competed with it, and luckily won first in my class. So it means a lot to me.
And what means a lot to Jacob means even more to an extremely proud father.
Very proud of them. All these tractors in here, there's only a couple that they didn't do. The rest of them, yeah, Patrick, Megan, and Jacob all did, and they put a lot of sweat in them. And you know, I'm not saying there wasn't some bickering, but then they'll pull together and help support each other. And for them to do all that, it is quite gratifying for my wife and I, and just a family deal.
Next, the market-to-market report.
Favorable planting conditions and extended weather outlooks eroded early session gains. For the week, the July wheat contract declined 7 cents and the nearby corn contract gained 4 cents. Strong European buying pushed the soy complex higher. The July contract hit a 2.5-year high midweek and held on for a 9-cent rally. July meal gained another $30 per ton this week to cap a 47% rally since mid-March. In the softs, the July cotton contract reversed course and put on $1.05 per hundredweight. Over in the dairy parlor, June Class 3 milk futures gained 24 cents. The livestock sector finished mixed as the June cattle contract gave back last week's bump and then some to finish down $2.37. August feeders added $1.67, and the June lean hog contract shed $2.10. In the currency markets, the U.S. dollar index expanded 75 points. The July crude oil contract flirted with $50 and settled $1.51 per barrel higher. June COMEX gold lost $19.80 per ounce, and the Goldman Sachs Commodity Index rose nearly 6 points, finishing the week at 367 even. Here now to lend us his insight on these and other trends is one of our regular market analysts, Brian Roach. Brian, welcome back.
Thanks, Mike. Appreciate it.
We had a busy week with the Federal Reserve meeting and coming out with a little bit more of a hawkish tone to the interest rate settings. And we also saw wheat slide down 7 cents on the week. How correlated are those two things right now?
Typically vary. All things being equal, the wheat markets in the U.S. rely on the dollar to make wheat exports competitive with the rest of the world. And the real problem is that we just haven't had a fundamental change that would create a short covering rally that we saw. If you look back in April, the specs were very short of the wheat market. The soy sector really kind of drug corn along with it, which also created some short covering in the wheat. We haven't seen that. The specs are not quite as short as they were in April. And so at this point, we'll probably, and we had a rally. I was hopeful that we would see a sell signal here this week to get some sales off close to $5 on the soft. And the dollar, the strength in the dollar kind of capped that. So we'll have to wait for other opportunities. But I think that the growers out there of wheat really need to look at seasonals, and the seasonal time to move sales ahead is still ahead of us, tied to the corn market. Right now, we'll probably go down into some buy signals in the wheat market.
Okay.
But that's okay. That'll give end users a chance to get some feed wheat bought. And I think from a timing standpoint, that's probably okay.
Given the fundamental factors, namely the massive supply of wheat domestically and internationally, how aggressive should end users be getting supplies secured?
I think what we're seeing, and if you look over in the meal market and in parts of the corn market, you're finding that end users were maybe a little bit complacent. We had 4, 5, 6 months of very cheap input costs. Those have helped the feeder cattle sector, as we'll talk about here in a second. But I think that if wheat gets down in that, let's just say the low mid 450 range, they ought to look at that as a buying opportunity.
Okay. On to the corn market. A little bit of strength this week. Are we going to break through $4?
Not without a different story, but I do think that the meal market, dragging the soybean market along with it, has been the real story. I feel if the corn has really overperformed from a demand standpoint, really linked to ethanol has been fairly strong. I believe the feed numbers are probably stronger than the USDA has them pegged right now. If you look at the fall numbers for feed going up 300 million bushels on corn, my sense of it is that we just don't flip a switch on animals, that they're there, and that we'll see on the June stocks and all positions report that feed demand is probably better than we expect. And the real performance has been in the export market. 2-3 months ago, we were thinking corn exports would not perform. They have. That all goes down to the shorter crops in South America. We've got a Brazil crop. The second safrinha crop is down 8 million tons, maybe 10 before it's all done. And so that's all making the U.S. exporter look way better in terms of pricing and reliability. I think there's some upside here still, but $4 has been a real mark. We've flirted with that. Well, we posted a 4.05 in April.
Yep.
We had a short $4 trade here this month. It looks like we could see another $4 mark on the July, but we haven't been too aggressive on selling the new crop at these kind of levels.
Okay. Do you have a sell signal in place today on the corn market?
Yeah, we're in the midst of a sell signal, using that to dribble sales. Really more lean on the old crop.
Okay.
Not real anxious about selling new crop at just under $4 on the board, 4.05 on the board, but I think you do have to be taking some risk off.
Okay.
The way the market's set up now, though, is if you look at the ending stocks position in corn going into fall, I think that the carryover into fall will be smaller than the 1.8 that we're looking at today, and that's got the trade looking ahead at weather. We're getting a whiff of what weather looks like in South America. If we have any kind of weather event like that in the U.S., we'll have a much different picture in the corn market for marketing some new crop.
Okay. Well, let's talk soybeans. You've mentioned the meal rally driving this market. Meal has been on fire for the past 4 weeks almost.
Yeah.
Are there still legs under that market?
You know, if you look at the Commitment of Traders report today on meal, it's down. We've got like 25,000 contracts short. from a spec side. We've been shorter than that before, but you have to go all the way back to 2013 to see that. Wow. My technicals on the July meal contract show that we could trade substantially above 400, 418, 420, and so I think it's still there. The big indicator that I like to watch is the spread, so the July to July spread, and that's been very powerful even in a down market yesterday. But as it ties back to beans, we had a sell signal. When John was on a month ago, we were very little sold. Since then, we've added some sales on a sell signal. The sell signal surged to another level. We think that growers want to be about half sold on beans.
Old crop and new crop, or
new
crop and
old crop? You're going to be working off. You're going to be down to the last few increments. But on the new crop of what you're going to sell for pre-harvest, you want to have about half of that sold at this point.
Okay. And that's where we stand today. Really, we are relying on meal. How big of a factor are exports here in this bean market today?
I think it's a demand overperform in the U.S. You got to go down to Argentina to really find what's driving this, and an 8 to 10 million ton reduction in beans down there has led to crushers. Half the world's exportable meal comes from Argentina. Half the world's exportable soybean oil comes from Argentina. And when you look at the conditions, quality concerns, somebody's short here, somebody's caught short, and they're going to pay. And I'm not sure how high this thing goes. We could certainly see a blow off, but I don't think we're done with the bean market nor the meal market.
Okay. Well, let's talk the livestock market. Live cattle down a little bit on the week, down almost $3. Where do we go from here?
Well, nearby, I'm not as concerned about what the cattle on feed report looked like this afternoon. The June contract I think it's okay here. The bull spreads between the June and say August are still performing even in a down market, so we're okay from that standpoint. Cutout values probably have peaked. Cash still is strong. And so I look at the June, it still probably has some upside and not as exposed to this big number we saw today. A placement number at 107%. The feeder guys I talk to are spending big money for these animals. The feed side of the feeder cattle equation has finally turned positive when you look at the several months of low-cost meal and low-cost corn and low-cost wheat. And I think they're holding those animals, letting them grow to the point where maybe they can cover some of that higher input cost. And that's why we saw these numbers in today's report so big. The big numbers over 800 were like 112%. Next tier was also up near 110. So there's a lot of big animals, and if you go back and look at the reports this didn't just start. This started back in December, and it continues to work its way through. So we're current today. I could see us going out into August and maybe not being current again.
So we could be getting back into the situation we saw last fall where we had massively overweight cattle. Really is a drag on the whole complex.
It certainly is, and it's a risk that these guys, these cattlemen that are hanging on are going to have to weigh out how much of this risk they really want to paint into the picture here.
And when it comes to painting it into the picture, we saw feeders put on almost $2 on the nearby this week. How much more legs do they have with this scenario taking shape?
Well, we're going to come down for a test in the futures market. Feeder cattle are, and my sense of it is that they'll probably not hold based on the emotion of this report being so. I mean, we missed the number by quite a bit today on the placement side. So I'd look for a downstroke in the deferred, certainly the October, and we'll see how cheap we get.
Mid legs, we're looking at 130s in feeder cattle, upper 120s.
Maybe 120, high 120s.
Okay. All right. Well, let's talk lean hogs. This has been an incredible story for the past going on probably 3 months now, this lean hog rally out of December. This week we stepped back $2.10. Just a little correction. What are we looking at here?
Well, if you look at the August lean hogs trading at 81, 82, and had pretty good legs. I mean, up until the first part of this week, we put in new contract highs in August, 3 days in a row. But then the dollar stepped in. The dollar really kind of capped that, sent lean hog futures down through the 20-day moving average. And I think that we're going to, and at this point, you look at the lean hog futures contract, we're going to go down and test the 200-day moving average, a bigger test. Guys who were getting hedges on ahead of this break, we'll probably want to hang on to them down below this 200-day if that happens and look to take some profits. The seasonal side of the lean hog picture, though, this is about right on. This is when we see these types of breaks from a seasonal standpoint. And the other thing that, when you looked at the maturity of that rally and wondered how far could it go, the specs were awfully long. 80% of the spec position in lean hogs was long, and that's kind of a telling picture. So there's a few folks that were, or a few producers that were getting some short positions on. I think at this point you're going to see a downstroke. I don't think the dollar becomes a headwind here to the degree, although I do think it's going to remain firm to maybe trading higher. And of course, we're going to go trade the July peak in cutout values that we normally see. So I see some upside after this break.
Now, you mentioned the dollar. We've heard hawkish Fed comments before, and the dollar has still weakened. You put some stock into it this time. Do you think we'll see a rate increase sooner rather than later?
Hard to say.
Okay.
I mean, that's a tough one.
It is.
I don't know. I do think that they're trying to do they're trying to finesse a move, make sure that investors in the financial community are apprised and they're not taken by surprise, keep the chaos and keep the tensions down in financial markets.
Okay. All right. Well, Brian Roach, thanks so much for joining us this week.
Thanks, Mike.
That wraps up the broadcast portion of Market to Market, but Brian and I will keep the market discussion going and answer more of your questions during Market Plus, available on our website. And if you believe in this service that's been provided each and every week for the past 41 years, go to the upper right-hand corner of that page of our website and help support future editions of the program. And join us again next week when we see how carnivores process cancer news about some of their favorite dietary staples. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.